Hey, everybody, Economic Ninja here. I hope you are doing great. I am coming to you sort of live-ish from this amazing construction site. How's it going, guys? There's a guy. There's a guy working. I always screw this up. Man, I can't even do that. The whole thing's reversed on me. We're going to talk about real estate and how it is slowing down immensely. All right. Things are happening so fast in real estate. It's quite exciting because what you're seeing in the background is what I want to be investing in as this market craters. I want to be buying up construction projects that didn't make it through, because we've talked about this before. Construction is a lagging indicator when it comes to the growth or the relative strength of the real estate market. All right. It's not until the very last stages of a real estate blow off top when just construction flurry is happening. We saw that in the last couple of years. And now we're seeing real estate stop. We're going to go through a couple different stories, and then we're going to come back to this amazing picture and we're going to talk about it. But at least there's somebody, there's one guy working. Oh, there's another guy in the background. All right. I'm not even going to try and point at this screen, this backward stuff. Ugh. All right, here we go. So this first story, we're going to go over two. Out of CNBC, existing home sales fell in April to the lowest level since the start of the pandemic. And I'm not joking. We're going to go over that. This is April's numbers, right? But wait until you see May's. We're obviously not going to get those numbers until June, but this is not letting up. And it is going to cause now. This is the serious sad part. A lot of people are going to lose their jobs, right? But for a lot of us investors that are looking to pick up real estate for pennies on the dollar, this is really exciting. Now, am I saying sell all your real estate because it's going to crash or stop buying real estate? No, there are certain very good reasons to buy real estate, even in this existing market. It sounds crazy, but I bought a home specifically at the very top in mid 2005, knowing it was going to go down in value. But I bought it for a specific reason. It made me a lot of money, both in write-offs and the ability to run two businesses out of that property. So it was a very strategic investment, right? So that doesn't mean to not buy real estate. None of this is financial advice. I'm not a financial professional. I am a real estate agent. I have owned a real estate brokerage as well. And I have been a real estate investor since the year 2001, became a professional real estate investor in 2001, actually, and an accredited investor. So I do have that background, but really I'm no professional. Okay. So, all right. Existing home sales fell in April. It says right here, sales of previously owned homes in April fell to the lowest pace since the blah, 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 blah started. Sorry. According to the National Association of Realtors, like people right now are driving their cars are like, what is blah, 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 blah. It's like that cartoon. What was it? The Dracula cartoon. He's like, why does everybody say that? It's a blah, 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 blah. I don't sound like that. If you guys know the name of that movie, please put it in the comment section below. It's a cartoon and I think it's hilarious. It says we are moving back to pre-pandemic sales activity, but I expect further decline, says Lawrence Yun. That's really interesting. You're the chief economist for the group. Well, the group, I think you might need to hire another chief economist. These are those guys that went to school and are super smart, but they probably don't own a lot of real estate. I don't know if Lawrence, and I don't want to just bag on Lawrence Yun, but I mean, you probably weren't an investor before the Great Recession either, because if you were, you'd be firing off on all first cylinders. Let's put it that way. Now think about what he said. We are moving back to pre-pandemic sales activity. No, we're not. Now, on a numbers basis, sure. But I'm telling you right now, if you're looking at April sales and you haven't even seen May's yet, just wait. I'm going to tell you something that didn't happen before all this craziness in 2020 started, okay, that we cannot say. We cannot name names. By the way, guys, hit the thumbs up button for the algo. Just really help me out. And if you really don't want to hit the thumbs up button, hit it 3 times. I'll get the message. Or you can hit the thumbs down button twice. I get the message there too. So my point being is that before all this craziness started, interest rates didn't double. They didn't literally double. They were high. I mean, mortgage rates, 30-year fixed rates were sitting around, 4.5%, 5%. Oh, okay, I'll give you that. And a lot of people say, Ninja, that's exactly where we were pretty much before that. Yeah, but we didn't see a doubling, right? So what's happening right now is, hey, breaking news. Stocks fall on Friday with market sell-off now pushing the S&P 500 20% below its all-time high. We are literally, it is official bear market territory on the S&P. Hey, things just keep getting better. Hey, and that's why you subscribe to the Economic Ninja, because of breaking news. Can't make this stuff up, guys. So we didn't have that happen before, where interest rates were, let's say 4 and went to 8, or 3 and went to 6. We just had that. And what that did is it changed the psychology of the retail investor in the home market, the real estate market. The headlines are immense. People are getting barraged with all kinds of stuff. So sellers are now panicking and putting their houses on the market. You've got buyers like, oh, whoa, wait a minute, this is a little too much. And that is going to cause a very drawn out effect on the psychology of both the buyer and seller over the next few months. I think even longer, to be honest with you. It's going to take a lot to pull us out of this doldrum, not depression, but people's mindset about what real estate is as far as an asset, a liability. Is it really worth these crazy numbers, all that kind of stuff, right? So we are nowhere near, I believe, in the psychology of the real estate market where we were before all this craziness started. Okay, sorry, I digress, but I think that's very important to go over. It says tight supply kept home prices higher despite rising interest rates. The median price of an existing home sold in April was $391,000, the highest on record, and an increase of 14.8% from a year ago. Those are staggering numbers, guys. 14.8% in a year-over-year increase in real estate is a massive number. We didn't even see this in the run-up to the Lehman Brothers crisis, the mortgage-backed securities crisis. So I wanted to bring you to this story as well, the very interesting story. I'm going to link both these in the comments below. It says home builders say high mortgage rates are already affecting demand. It says demand is still strong. Yeah. But builders throughout the U.S. reported lowest level of buying activity in almost 2 years. Well, that's obvious because prices keep skyrocketing, and you couple that with rising mortgage rates, and you have some serious issues. Now, an interesting story is the lumber. Lumber spiked back last spring, crashed in July and August. Then, and I get it, a lot of people are going to go, didn't crash in my Home Depot. We're talking about the futures price. And yes, it did eventually. It does eventually get its way down to the home building, home do-it centers, right? The physical lumber form. But it also spiked again in November, because in November, December, people started, traders on Wall Street started understanding that rates were going to go up. I started talking about mortgage rates were going to start rising in December because the Fed came out and said, hey, we're raising rates. So, demand for lumber didn't exactly shoot up. What happened was the futures shot up because they knew where this was headed. Higher interest rates, meaning higher everything. So people wanted to lock in savings right now, right? Well, now we've seen lumber come down in price, completely be obliterated because, here, you know what I'll do is I'll pull that up too. Because of the demand, right? So traders on the flip side are starting to become very afraid, right? And what we'll do is we'll just pop out a chart, right? I haven't looked at the lumber chart in quite some time. So, okay, on the 1 month, obviously we've seen lumber futures, and this is for 1,000 board feet. These contracts go from 941 down to currently 690. That's impressive. Let's look at the 1 year, okay? And remember, this is the 1 year is when we are peaking. Actually, let's do this. We'll go back to when I started warning about this this deal. And so 2022, 2021, let's see, we were right here when I was talking about the lumber prices. It was actually April. Okay, April. So I said we actually had some movement to go, but don't worry, lumber is going to come crashing down. And I said by around July, August, because people are going to care more about the cost of food and fuel. I was actually talking about food and fuel inflation back then because of the amount of money that had been shoved in the system and where we were going to see what we were going to see with money velocity. And as you could see, it peaked here, but it wasn't literally until July where we came crashing down to our lows, July and August, right? So this is the other interesting story. I did a video, and this is all pertaining to real estate, right? And the notion, or the perceived notion, that real estate is always going to go up. If you don't buy now, you're going to miss out on this big bull run, right? In November, I did a video saying lumber is going to start exploding in price again because of the interest rate, the mortgage rate. And so people are going to FOMO in. And we saw literally lumber futures go from around 650 to where they topped out around a little under 1,300. Now, again, we see it coming down. I mean, this is a huge whipsaw. It's pretty darn impressive. And I believe that you are going to see, not financial advice, trading advice, but you're going to continue to see weakness in lumber. So I would not be surprised if you see lumber down here at this sub even sub 500 level in the next couple of months. Because the fact is, these home builders, the sentiment is getting really ugly. And it says right here, it says builder confidence in the market for newly built U.S. single-family homes fell 8 points to 69 from April to May, according to the National Association of Home Builders and the Wells Fargo Housing Market Index. That's the lowest reading for home builder sentiment since June of 2020. So literally, June of 2020, things were bad, right? The markets were cratering because everybody was scared. They didn't know what was going to happen, how long everything was going to be closed. It was ugly. So now we're sitting equal to that. And I believe we have farther to go. It says in a survey, builders reported that they experienced the lowest level of buying activity since July of 2020. Think about that. That is impressive. And you have the Federal Reserve straight up saying, we are not going to stop raising rates. Now, can they? Are they going to be able to pull off higher rates? In my opinion, no. I think 1% Fed funds rate, 1.25%, the highest. I think I'd be shocked if they even get to 1.25% before everything's collapsing. And you could see right now in the markets, just absolute bloodshed. And look, I mean, right here, we're now in bear market territory for the S&P. So you got to ask yourself, where do I put my money? Quite frankly, at this point, what I'm doing is I am looking to save on taxes anywhere I can. So if I put money towards something, it better have a tax advantage. But also, what kind of debt can you get rid of, right? The only kind of debt I have is debt that I use for assets to appreciate. That's important. But in a falling economy too, you got to look and say, well, what kind of assets do I have? What kind of cash flow do I have? Is that going to be affected? You know, if you have rental properties and these are well-priced rental properties in good locations and the tenants you believe are going to have jobs long-term, great. If your tenants are in the construction industry or the home mortgage industry, I'd be careful because that is a very easily contracted industry, both of those. It also blows up when it takes off too. So I hope you guys got something out of this, because I think that right now we are seeing what we've been talking about for about a year and a half. And it's exciting. But remember, this cycle, the construction and real estate cycle, takes a long time to play out. When I started selling off everything in 2005, it wasn't bottomed out until 2010. So do I believe this one's going to be worse? Yes, which means it will be compressed in time. But it's still, I don't look at this going, okay, next month's the month to buy. There's a lot of things to shake out. We had a big boom, which means we're going to have a big drop. Now, that being said, again, if you're buying real estate, buy it for the right purposes. Buy it for good, solid cash flow. Buy it for your really good tax write-offs. You want to make money from real estate a few different ways. You want a few different outs in case your plan doesn't work. All right, guys. Now, if you got something from this, you can hit the subscribe button for me. I'd be super stoked. Also, thank you to Ninja Nation. You guys are awesome. Why? Because you are prepared and you're not scared. Yes, you guys are licking your chops, because we're going to do what when this happens? We're going to buy everybody's houses. All right. And not in a bad way. Just like the people that rolled their eyes and said, you're crazy. The market's going up. It's never going down. You're nuts. You're a doom and gloomer. Okay. Hey, you want to rent from us? That's all we're going to say. All right, guys. That being said, the Economic Ninja is out.